In the world of global finance, it's often crisis that creates titans. And the takeover of Credit Suisse, well, it has forged a brand new UBS on a scale we have just never seen before. So, what does this new giant actually look like today? Using the official numbers and some fantastic analysis from HDIN Research, we're going to find out. So, here's how we're going to break it down. First, we'll get a handle on the sheer scale of this new giant. Then, we're diving into the nitty-gritty numbers behind the massive integration. After that, we'll take a look at its capital fortress, and finally, we'll get the analyst's verdict on what it all really means for the future. All right, first up, let's just set the stage. The merger of UBS and Credit Suisse wasn't just some simple business deal. No way. It was a fundamental reshaping of the entire global wealth management landscape, and it created a new, undisputed leader of the pack. And you gotta see how the bank is positioning itself now. UBS is calling itself the only truly global wealth management firm. Now, look, that's not just some marketing buzzword. It's a strategic claim, and it's built on a geographic footprint that is just unrivaled, connecting the Americas all the way to the booming markets in Asia. And here is the power behind that claim. Nearly $5 trillion. That's just in invested assets for its wealth management clients. To put that into perspective, that single number is bigger than the entire GDP of most countries on Earth. It makes UBS the undisputed heavyweight champion in this arena. It's not even close. Okay, section 2. Integration by the numbers. Look, merging two colossal banks is one of the most complex, difficult maneuvers in the entire corporate world. But as you're about to see, the data shows UBS is moving with some incredible speed and precision. The progress is just staggering. 85% of Credit Suisse's Swiss client accounts are already on UBS systems. You can think of this as the critical digital plumbing of the whole merger, and it's almost done. That puts them way ahead of their 2026 deadline. And on the ground, the physical consolidation is basically a done deal. 95 branches have been merged or closed. This is what decisive action looks like. They're eliminating redundant spots and starting to capture those all-important cost savings. And then, well, you have the toughest part of any merger, the human cost. A net reduction of over 7,000 employees in just a single year. It's a difficult number to see for sure, but from a purely strategic perspective, it's one of the main levers for achieving the cost savings they promised. This table right here, it's basically the new blueprint for the bank. You can see, clear as day, how all the pieces stack up. Global wealth management is the undeniable engine, driving more than half the revenue. But the investment bank and the personal banking divisions, they're really powerful supports, creating what looks like a balanced and diversified financial machine. So here's the official roadmap. The legal merger, the physical branch consolidation, that's all in the rearview mirror now. The next huge hurdle is getting all the clients' accounts migrated by early 2026, with the entire massive project expected to be pretty much wrapped up by the end of that year. Now, a really key part of this whole integration is something called the non-core and legacy unit. Honestly, the best way to think of it is like a massive, professionally managed garage sale. UBS has basically roped off all the unwanted assets and businesses it got from Credit Suisse, and this unit's job is to sell them or wind them down, which efficiently de-risks the main bank from all that baggage. And that brings us to our third section, the capital fortress. Operationally, this integration is, wow, pretty impressive. But is the foundation of this new bank actually built on solid ground? Let's dive into its capital strength. At first glance, the headline number looks rock solid, a CET1 ratio of 14.4%. Now, for those of you who aren't familiar, that's the key measure of a bank's financial cushion, its ability to absorb a really big shock. And a number this high, it suggests a very well-capitalized, very robust institution. But if the bank is so strong, you have to ask yourself, what's the catch? While UBS has been busy mastering its integration, a new threat has been brewing, and it's right in its own backyard. And there it is, a potential $22 billion capital shortfall. This staggering figure is coming from proposed new too-big-to-fail rules right there in Switzerland. Basically, regulators could force UBS to hold way more capital than it does now. And this, right here, is the single biggest risk casting a shadow over the bank's future. All right, let's get a little technical for our institutional viewers for a second. This table breaks down the bank's risk-weighted assets, its RWAs. That's just a measure of how risky the bank's investments are. You can see how currency effects actually added risk, but they more than made up for it by shrinking their asset base and through new Basel III rules. It shows some really smart, active management, but that huge regulatory risk we just talked about, it's still looming over everything.
So, let's tie this all together in our final section, the analyst's verdict. How does an outfit like HDIN Research weigh this incredible picture of operational success against this massive regulatory threat?
And this quote from the HDIN Research analysis really just nails it. They call this new regulation a gray rhino. A danger that's highly obvious, but that people often ignore until it's too late. The praise for the integration is crystal clear, but the warning is stark. This single challenge could seriously squeeze the bank's ability to reward its shareholders.
So really, what you're looking at here is a tale of two realities for the new UBS. On one side, you have these incredible operational strengths, unrivaled global scale, near flawless execution. And on the other side, severe regulatory headwinds, from these new capital rules to all the legal baggage they inherited from Credit Suisse. So, if you're watching UBS from here on out, what are the big things to keep an eye on? Well, first, the final integration costs. Second, what that final number on the new capital demand is going to be. Third, the outcome of some of these major inherited lawsuits. And finally, client retention. That is going to be the ultimate report card on this historic merger.
And that leaves us with this one huge critical question. UBS has proven, without a doubt, that it can master one of the most difficult corporate integrations in history. But its next challenge, it isn't operational, it's political. Can the bank's sheer operational excellence overcome a regulatory mountain that's being built specifically to contain it? The answer to that question will define the next era for this new global giant. By the way, this entire analysis was built on the in-depth research from HDIN. So if you want the full report, a much deeper dive into all the data, you can visit their website. Thanks so much for joining me.